warm African welcome to Day 2 of the 4th East African Banking and Microfinance Forum 2021. Yesterday, we launched the forum on a high note with opening remarks by the executive leadership of Trade and Development Bank, TDB, and the European Investment Bank, EIB. This was followed by a keynote address by Professor Njuguna Ndongo, Executive Director at the Africa Economic Research Consortium, AERC. In his keynote address, Professor Ndongo profiled a number of recent research findings by the AERC that are quite pertinent to enterprises and governments across our region as we all seek to build back better. In particular, he highlighted 4 areas of focus, and these are the need to protect private investments, the need to protect, regulate, and develop markets, the need to refocus on domestic resource mobilization, and in the context of the 4th Industrial Revolution, the need for Africa to build back better. Today, we pick up where we left off with discussions on very relevant topics, including leveraging technology to improve trade finance, climate change, and green finance. We therefore invite you to stay with us as we journey ahead. This forum is the fruit of a strong partnership between TDB and the EIB, the Bank of the European Union. Accordingly, I am honored to invite Mr. Paolo Lombardo, Head of Regional Representation at the EIB, to say a few words and introduce Her Excellency Henriette Geiger, Ambassador of the European Union to Kenya, who would share today's opening remarks. Welcome, Mr. Lombardo.
Good morning again, Your Excellency, Ambassador Geiger, colleagues of the Trade and Development Bank, dear African partners, DRB colleagues, distinguished guests, ladies and gentlemen. Again, good morning and welcome to the second day of the forum. Today, we'd like to give you my personal insights on the challenges and opportunities of our industry and how I believe we as banking practitioners should address them. Let me start saying that there is no doubt in my mind that the banking sector must and will play an important role in addressing old as well as new challenges that lay ahead of us. Initially, the COVID-19 pandemic temporarily distracted us from some of the global challenges that were already on our radar screen. But as the crisis unfolded, we all realized that in fact, the pandemic somewhat amplified certain trends or made us more aware of them. In premise, the effects of climate change on our economies and lives. Second, digital transition and technological disruption. Finally, inequality. As we know, crises often hit hardest those who are less fortunate, and this was no exception. Now, let me start with climate. As you know, EIB is the climate bank of the EU. What we're learning from this front is that we've been too complacent. Latest figures that have been discussed at COP26 show that we are on path to overshooting the 2-degree target based on the existing commitments by governments around the world. And only a concerted effort can actually make a difference and bring us back on track. When it comes to the COVID crisis, it accelerated technological disruption, which was already ongoing and highlighted the digital divide. Finally, sad to say, inequality, or allow me to use the word unfairness, simply rose too big to ignore. At COP26, much of the discussion is about adaptation now, in particular how poor countries can be supported in dealing with the potential catastrophic consequences of climate change. So you will ask, where does the banking sector fit in all this? Let's take a look at the Paris Agreement of 2016. It was visionary in this respect, in my view. 6 years ago, the Paris Agreement placed the financial sector at the very center of green transformation, requesting that, and I quote here, the finance flows be consistent with a pathway towards low greenhouse emissions, climate resilient development. So already 6 years ago, world leaders understood that key was to ensure that the banking sector would play a role. So this puts a huge responsibility on our shoulders. So how can we meet these high expectations? What does it mean for us as banking practitioners? First, I would say that we as bankers cannot stand on the side, but we need to assume a leadership role in steering the economy towards a green pathway. Second, it means that we need to be ambitious in our goals. And finally, that we should be creative and courageous in our actions and the challenges that we have in front of us are of unprecedented proportions. Now, let me start with leadership. I think that we can all agree that Europe, and within Europe, the European Union and the EIB have shown a degree of leadership that the world lacked severely over the past few decades. The transition to a greener model in Europe was taken at a time when there was very little unity of view on this topic around the world. EIB's first climate strategy goes back to 2015, and it was already groundbreaking at the time. And we actually improved it further in 2020. In 2019, we broke new ground with our energy lending policy. We were the first bank in the world, and possibly we still are, to declare a moratorium on the financing of projects involving fossil fuels. This was a controversial and much discussed discussion. I assure you that, because I was there in internal discussions that preceded this decision, but one that surely indicated leadership on the part of Europe and EIB as the climate bank of the Union. So we were the first to break ranks. And despite all the discussions that are taking place, we're sticking with that decision. There's a lot of discussion about transition fuels. We believe there's only one way ahead. So I look forward, the EIB looks forward to a virtuous race to greater leadership action in our industry. So I hope that sometimes in the future, others will actually beat us in terms of ambitious goals. Let me be clear, by the way, leadership is not just for the larger banks, it's for all of us. Even the smaller banks, even microfinance banks can show leadership. Now, let me talk about ambition. Many players in the finance industries have set clear paths and ambitious climate targets for themselves. We read this on newspapers and in the declarations of CEOs every single week. It is essential that targets are based on agreed green criteria and standards. I'm not talking about greenwashing here. All I'm saying is that if we want a chance to meet our climate objectives, there cannot be any doubt whatsoever about what constitutes a green or sustainable initiative. Today, I can assure you that what is green to me may not necessarily be green for you. In our case, the EIB undertook to become fully compliant with the Paris Agreement. So every project we do must support a pathway towards a temperature increase of 1.5 degrees and no more. We also apply the EU Green Taxonomy to ensure that there is absolutely no doubt as to what is green and what is not. Most importantly, we set ambitious quantitative targets for this decade. We undertook to mobilize 1 trillion of green investments by 2030 on the back of at least 50% of what we do to be in climate action and environmental sustainability. And this we will achieve by 2025. Let me be totally honest with you. Achieving this level of ambition was actually not easy at all. It required a full review of our business model, of our methodologies, our procedures, our reporting, sometimes very painful process. At the time, I was head of credit risk at EIB, and the integration of climate risks into our risk management framework proved particularly heavy and controversial. Finally, let me say something about creativity and courage. Again, I do not wish to boost EIB's track record, but I do need to give you an example which I believe shows indeed courage and creativity on our part. The development of green bonds. Everybody talks about green bonds. Many of you may not know that they were established. The first bond was actually launched in 2007. so nearly 15 years ago by the IB. Today is common practice for corporations, financial institutions, sovereigns to issue green bonds. But in 2007, we were alone, and frankly, we didn't get much attention. We were a bit in a solitary mode. Today, we're not only the largest issuer, including sovereigns, of green bonds, but we're followed by many, many players around the world. Now, I know we're not alone in this creative stride. For example, our partner TDB has been working on some innovative green financing solutions, which in my opinion, can give further impetus to the transition to climate finance in Africa. We look forward to hearing more about these ideas. So we all need to be more creative, show more courage. Let me move on to digital transition. The finance industry is adopting more and more digital models, but I do not believe this is happening fast enough. Interesting enough, I think that we as Europeans are moving slower than some African banks, by the way. I personally don't believe that the current business model without heavy use of digitalization will survive going forward. Social media companies, e-commerce platforms are already turning into de facto banks, and they are now becoming competitors to financial institutions. But there is another aspect of digitalization which I find very promising. Digitalization has spurred innovation in finance industry, and in this region has shown remarkable innovation capabilities and leadership, not found, as I said earlier, in other parts of the world. Digitalization of financial services also has shown the potential to further improve financial inclusion and bring down the cost of financing, which is particularly important for Africa. In this respect, the IB has commissioned a feasibility study on the required investments for digital transformation of the banking sector across Africa, which will be discussed later today. We have huge opportunities ahead of us in this field. And again, we need courage and creativity to address the challenges that are before us. In concluding my intervention, allow me to just pass on two last messages. First is partnership. The challenges ahead of us and the opportunities before are not for single countries, institutions, or players to take on themselves. It doesn't matter if you're as big as the IB. Even the IB is not going alone. The IB has a very strong partnership, not only with the European Commission, but with other European players, and is working closely with all other financial institutions. Partnerships are the key going forward. The second message is about optimism. When we turn on the TV, we read the newspapers, we often hear about what is going wrong. Well, I think we can be optimistic, because without it, I don't think we will actually go far. This region is particularly rich in innovation and creativity. It has also shown unique leadership, taking the renewable energy sector, which has achieved world best-in-class results at global level. More than 90% of the electricity that comes out of the socket is renewable. Very few countries around the world can claim that. And then you have the pioneering of mobile banking through M-Pesa, and socially responsible banking with regards to women empowerment done by institutions that are present here today. So yes, the challenges are significant, but there are very, very good reasons to be optimistic. So allow me to conclude by wishing all of you a fruitful and intense exchange, and by thanking our partners, TDB, for the excellent organization. I now have the pleasure to pass the floor to Her Excellency, Ambassador Geiger. Thank you.
Thank you, Paolo. Distinguished guests, ladies and gentlemen, thank you for the invitation to address this forum on behalf of the European Union. Kenya's private sector is the main driver of economic growth and job creation, and its importance has been recognized fully by the government of Kenya. with the Big Four agenda and pertinent sector policies. For the European Union, the President of the European Commission, Ursula von der Leyen, has included among the priorities inside the EU and on the external action front an alliance for sustainable growth and jobs. This will involve de-risking of sustainable investment, support to the improvement of business environment and the investment climate, support to education and skills development, this is key, and to regional economic trade integration, in order to mobilize additional finance and accelerate progress towards the Sustainable Development Goals. In this, the EIB is a key partner. And I'm very impressed by the amount of funding that the European Union's bank, the European Investment Bank, the EIB, has provided to the countries represented here in the past 13 years, both in terms of SME credit lines and microfinance credit lines. As the theme of this year's forum, gearing up for recovery and growth, building a more resilient banking sector, and more than 1 year since the first COVID-19 case was detected in Kenya, we are very much aware of the detrimental impacts the pandemic has already had on this country, including on health and the economy. We recognize the commendable efforts by the government, which imposed immediate measures to curb the spread. However, we also need to recognize the tremendous job loss and the socio-economic impact this has had and still has, especially on the most vulnerable of the society. Estimates suggest that at least 1.7 million Kenyans lost their employment. And of course, this is not counting the informal sector, which is tremendously hit by the crisis. The World Bank estimates that globally between 119 and 124 million more women and men have fallen into extreme poverty by the end of 2020. And I just wanted to tell you that for the first time in history, the SDGs have taken a tremendous hit. After being well on track on the Sustainable Development Goals globally, COVID has made us fall back so bad. I'm not sure whether we can recover from this anytime soon. So the World Bank is also warning that for a majority of people around the globe, COVID-19, unfortunately, is not a passing crisis. It will take a long time for countries to recover, especially developing countries. But we can also not neglect the impact on the most vulnerable, as I mentioned before, women and children. The long closure of schools and learning institutions has had a tremendous impact on learning outcomes. And I was seeing a presentation where a study of Harvard concluded that the learning losses have been much more important than what corresponds to the time of the children that were out of school. This is very worrying. And they also concluded that those children who come from underprivileged households, they have fallen back 3 times as much as those from households where the parents could support them during that time. So this is a gap that will take a long time to close. From the onset of the pandemic, the European Union has dedicated considerable commitment and considerable resources, not only to combat COVID inside its borders, but to support our partners globally. The EU was among the first to provide substantial assistance to Kenya. That was 65 million in direct budget support, something that has been very much recognized by Kenyan leadership and by the wider population. I just spoke to the finance minister of Kenya, and he was bringing that out very, very strongly, that this immediate injection of financial resources really helped for the first response. And we're very proud of this. I was at the time at the forefront in the European Commission. I can only tell you that we worked day and night to make this happen in an unprecedented, historic effort. Within the EU delegation here in Kenya, we prepared this comprehensive grant package of intervention with accompanying the 65 million, with interventions to make it possible to intervene in health, social protection, safe trade, and the budget support I already mentioned, and access to finance for SMEs. Specifically related to access to finance for SMEs, SMEs have a huge potential to at least partly create the 1.2 million jobs needed per year to keep pace with the youth entering the job market in Kenya. And they are extremely important to avoid further losses of employment related to COVID. I was recently in an opening of a business incubator with the governor of the central bank, and we talked about the importance of SMEs in Kenya. But very few people know that the largest economic bloc in the world, the EU, is made up mostly of SMEs. I don't have the exact number, but it's, I think, hovering around 80% of all the wealth created in the EU is made up by small and medium-sized businesses. This is not a well-known fact, but this really means that SMEs are the backbone of a strong economy. That's the reason for the Team Europe, so that means the EU with its institution and all its member states, and EIB Equity Bank give support to Kenya's small and medium enterprises in the pandemic program, which was launched in the beginning of 21. The EU has made available a grant of 20 million euro, and we are committed to link grants with loans to leverage the impact of cooperation funds, because we realized a long time ago that grants are not sufficient. We need to use the grants to make much more money available by linking it with loans to leverage. We call this blending. Blending means so the combination of the grants with loans or equity from public and private financiers. The idea behind is that the grant element can be used in a strategic way to attract additional financing for important investments. This is clearly the case, as the 20 million grant made available already 120 million euros or 15.6 billion shillings for loans to SMEs in Kenya. Using blending as a tool of EU external cooperation offers various benefits to different stakeholders. The beneficiary governments, to find a sustainable and affordable way to tap into significant additional financing for national development priorities. The final beneficiaries, So to give increased access to public services, infrastructure, and credit, but also in the social services, to increase socio-economic development. And the financiers to mitigate the risk of investing into new markets and sectors. So the EU has developed a guarantee instrument for that to de-risk loans. The European Union is leveraging the impact of our aid through donor and lender coordination, and like that we have much more impact. Now, in addition to the support to Kenyan small and medium enterprises amid COVID-19 pandemic program, and as another example of blending, the EU in Kenya set up the AgriFi Kenya program, which supports investment plans in the agro-business sector through a challenge fund and a parallel financing facility established in partnership with the EIB and Equity Bank. The AgriFi Kenya program aims to provide loans at appropriate conditions to agribusiness, which include in their business models the integration of smallholder farmers in their value chains by providing capacity building, access to better market conditions, or innovations. Agribusinesses will be able to access loans at longer tenure in Kenyan shillings, unlocking investments which would not otherwise take place. And of course, Paolo referred also to access of loans to women. This is very important, especially in the rural areas. Regarding today's forum program, I noticed that green finance and digital transformation of financial institutions are two of the remarkable sessions today. These sessions are fully in line with the strategic support that the EU delegation in Kenya is bringing, because we are focusing on digitalization of the economy, both at the government and private sector levels. And in this way, we are supporting the strategic goals and the Vision 2030 of Kenya. The implementation of the Green Deal, what is termed in the EU the Green Deal, is an integral part of the EU delegation's strategy in Kenya for the next 7 years. And SMEs and private sector will play a pivotal role in making the green transition, the Green Deal, a reality. Kenya has already advanced a lot, as Paolo was alluding. What we have achieved on sustainable energy provision is unparalleled in the world, and is really a shining example that others can follow, because it shows it is possible. It is possible when all work together. And we are very proud as EU that we can support Kenya in this very ambitious goal to transit to a green economy. This is what we are aspiring to in the EU ourselves, and we want to partner with Kenya. So, providing access to finance for green SMEs, operating in green ventures such as renewable energy, waste management, environmental protection, energy efficiency, sustainable land management, or transport is paramount to make this Green Deal and the transition happen in Kenya. This forum is an important occasion to share our ideas on the most efficient and effective approaches to provide to the SME sector in Kenya, but also Eastern Africa, the appropriate conditions to fulfill its important role for the economic development of their countries and the entire region. With this, I would like to thank you all, and especially the EIB, for organizing this forum. And I hope and I wish you very fruitful deliberations. Thank you very much.
Thank you very much, Ambassador Geiger, for presenting our opening remarks for the day. I'd also like to thank Mr. Lombardo for encouraging bankers across the region to follow the example of the EIB and be, quote unquote, creative and courageous in steering our economies along a green development pathway. Ambassador, you mentioned the COVID-19 pandemic, which indeed has clawed back some of the gains made in achieving the Sustainable Development Goals, particularly in the areas of primary level learning and impact on vulnerable women and children. However, we are encouraged by what you shared about the various initiatives being undertaken by European Union bodies to help the region build back better. These include, but are not limited to, the Alliance for Sustainable Growth and Jobs and funding lines provided by various EU bodies to governments across our region, such as blended finance, targeting the SME and agricultural sectors in Kenya in partnership with domestic financial institutions. We appreciate and value this strong partnership for development between the EU and its various arms, such as the EIB and the region, and long may it continue. Now it is time to transition to our first presentation for the day. This presentation is on the institutional and legal operating environment in our region. This topic will be presented by the TDB Deputy Group Managing Director and General Counsel, David Bamlango. I therefore hand over the floor to our presenter for this session 2.2 to take the conversation forward. Thank you and shukran.